Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model daily briefing for Monday the 27th of the 9th, 2021. Time is just gone 0440 GMT. Asian session coming to a close, European session firing up, our lunchtime, North American session. Right, Friday the 24th, then the last full trading day. We had a positive opposed driver in the dollar at plus 101. Front and back door flows mainly coming out the yen at minus 76, out the pound at minus 45, and the euro was the positive rock at plus 20. Activity plus or minus 121. Just for a reminder, last week then, Monday the 20th to the Friday the 24th, we had a positive opposed driver in the dollar plus 195. Front and back door flows mainly coming out the yen at minus 166, out the pound at minus 64, and the euro was the positive rock at plus 35. Activity plus or minus 230. So last week then, the end of last week, you can see that the batting order on Friday was similar to the overall in the week. So you've got a positive dollar driving funds out of the yen complex, and you've got the yen complex being aided by the equity transmission, and then you've got a soft pound and a slightly solid euro, and that was an activity of plus or minus 230. Intra-week then, this is the Asian session to about 15 minutes ago. You've got a positive opposed driver in the yen, plus 27. Front and back door flows mainly coming out the euro at minus 24, out the pound at minus 7, and the dollar's the positive rock at plus 4, activity plus or minus 31. So we've got a slight reversal in these flows, mixed reversal anyway, we'll talk about that later. So we'll write up the flows now for the Asian session, don't go away. Right, we're back, we've written up the flows then. So the euro is weak except against the dollar, the pound and the Swiss, which are weaker. The yen is strong except against the CAD and the AUD. The pound is weak except against the Swiss is weak across the board. The CAD is strong except against the AUD. The AUD is strong across the board. The NZD is strong except against the AUD and the CAD. And the dollar is weak except against the Swiss and the pound. So what have we got then? We've got Swiss weakness across the board, AUD strength in the Asian session. We've also got commodity currency strength as well, and we've also got a rise in the oil price, which we'll talk about in a minute. So what's going to knock it about? Today you've got Euro's durable goods, non-defense capital goods, which is a tier 1 event about our lunchtime, and then it's pretty light after that. Tuesday it's Bank of Japan monetary policy meeting and AUD retail sales, and then it's light after that, and so those two events are very early in our morning. So it's basically after that, Tuesday's pretty light and Wednesday's light as well. So we're running into a light period in the economic calendar, so we're going to have to bear that in mind when the way the market moves. Right, so we'll stop it there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically big pump up, came right off. It's now 0.20 from the high, so it's 20% above below the model high. So the dollar's come off a bit, having been pumped up and down. Gold is 0.36 from the floor, so it's 36% from the floor, and oil is riding high. It's 0.125 from the high, about an 8 from the model high. Wall Street, S&P and Tech, they've all got this big rise, drop and then recovery. Wall Street 0.28 from the high, S&P 0.25 from the high, and the Tech 0.22 from the high. So you can see that they're all roughly 25% below their modelled highs, but they're on the up at the moment. So US 10-year and the bond, these are the prices of the bonds, so yields are inverse. If you look at the US 10-year, basically the price has been pumped right down as the bond has, and it's just bumped off the floor now. So you've had strong yields in Europe and America, and the prices of the bonds are just starting to think about coming back up. So we're looking at maybe a peak in dollar and euro strength at the moment, but we'll see. Copper's took a big dive. It's now 0.38 from the high. It's come back, and US Steel's bouncing along the floor, just slightly higher, thinking about coming off the floor. So that's where we are. Let's just get rid of this and then try and think what's going on today. So you've got this. Once we get the durable goods out of the way, we've basically got 2.5 days trading with very little data, and that's going to be significant in terms of an economic calendar situation. So you've got this in the majors. You've got the dollar, the euro, the yen, and the pound. Now, with regards to bonds, the bond market would suggest that that we're going to see a fall in the dollar, likewise in the euro, and if you look at where is it, last week flows, you've got a weak yen, a weak pound, a strong euro, and a strong dollar. So we've got this like disconnect in the flows and the bond market. You've got equities are coming up and look strong at the moment. So you may get a negative transmission in the yen, and the pound, which was pumped. The pound has been pumped and it's come off slightly like that. So you've got this sort of situation, and we've also got oil coming right up, which so you've got CAD with oil, possibly a positive transmission there, and you've got strength in the commodity currencies at the moment, and you've got Swiss weakness across the board, which is fairly risk on, and the Swiss has been quite high. So the chances are, these are the flows. The trouble is on a technical basis. If you look at the charts on a sort of a daily basis, so you're looking at fairly long-term charts, you're buffering up against all sorts of support and resistances, multiple support of resistances from a few weeks ago and even months. So the market's quite a twist on it at the moment. Let's say the bond market is suggesting that euro and dollar strength have had enough, and equities are still coming up, and the pound is starting to come off. But so we've got a very mixed picture. And we've got this 2.5 days light data. So it's very difficult to say at the moment which way the market's going to jump. But it looks like that the main takeaway is dollar weakness and euro weakness, which is unusual together. So normally you get dollar weakness and yen together, or dollar strength and yen strength together. So this is where the problem is in the markets at the moment. So you're looking at that sort of scenario, and maybe you've got this sort of commodity current. The CAD's potentially on the up, and the Swiss are on the down. So these are the main drivers. So we can't really we can't say more than that at the moment. We'll see how the market behaves after the US durable sales. So that's where we are. So I hope that was useful. Watch out for dollar weakness, euro weakness, and these sort of scenarios either changing or reinforcing themselves after US durable sales. So thank you for watching. See you tomorrow for the daily briefing.